Understanding the financial landscape is crucial. Are you prepared for what's next?
Absolutely. With insights from Danielle DiMartino Booth, Stephan, and Jonathan Miller, we uncover market shifts that impact your investments.
We've distilled their knowledge into quick, actionable summaries, saving you time and empowering your investment strategy.
Stay tuned. We'll explore how interest rates, market dynamics, and strategic investments can shape your financial future.
Today, we're exploring the strategies of the Federal Reserve with Danielle DiMartino Booth.
Danielle examines the factors influencing inflation and interest rates, which are impacting market dynamics.
Danielle points out that the Federal Reserve's interest rate policies significantly influence economic conditions.
She notes that higher interest rates can mitigate inflation but may hinder market growth. Danielle clarifies that increasing interest rates often result in lower stock valuations.
So, market sentiment does adjust rapidly with Federal Reserve announcements.
Precisely. Traders are highly attuned to Federal Reserve signals that might shift their investment strategies.
What insights does Danielle have about inflation's effect on consumers?
Danielle asserts that rising inflation leads to increased prices, altering consumer purchasing patterns.
Looking ahead, what predictions does Danielle make regarding the Federal Reserve?
She foresees that persistent inflation may prompt the Federal Reserve to implement additional rate hikes despite potential market volatility. Danielle believes that with appropriate policy measures, inflation could stabilize.
What if those measures are inadequate?
Failure to act could lead to sustained high inflation and economic instability.
Danielle concludes that investors must remain alert to interest rate fluctuations.
Additionally, monitoring inflation trends will significantly aid in making informed investment choices.
Today, we explore Stephan's insights on wealth-building strategies for the coming years.
He emphasizes that strategic financial planning and timely investment decisions are crucial.
According to Stephan, now is the time to reassess financial strategies for better wealth outcomes.
He stresses that acting swiftly can capture emerging financial opportunities. Discusses the strong appreciation potential of real estate.
He recommends making timely investments to capitalize on current market conditions. Discusses stock market strategies, particularly during downturns.
He explains how value investing could lead to significant returns with the right approach. Emphasizes the need for diversifying investments to lower risks.
He advises maintaining a well-rounded portfolio for long-term success. Predicts strong financial growth for those who follow these strategies.
He encourages starting investment plans now to maximize benefits.
In summary, highlights the urgency of implementing investment strategies immediately.
He reiterates that informed actions today can significantly influence future financial independence.
Adapting to market changes is critical for ongoing success.
Investors should focus on diversified strategies to maintain financial security.
Today, we're examining the impact of Wall Street's actions on the housing market, as discussed by Jonathan Miller.
Jonathan highlights how changes in interest rates are reshaping buyer behavior and real estate prices.
Jonathan Miller points out that rising mortgage rates are pushing many potential buyers out of the market.
As a result, the housing market is shifting from a seller's advantage to one where buyers are negotiating for lower prices. Jonathan explains that with interest rates reaching new highs, many buyers find homes increasingly unaffordable.
This has created a significant dip in purchasing power for average families.
Jonathan discusses how many homes are currently being listed at lower prices.
This trend is creating new opportunities for buyers previously priced out.
Are investors now hesitant about real estate?
Exactly. Jonathan highlights how economic conditions are causing investors to proceed with caution in the housing market.
What does Jonathan predict for the future of the housing market?
Jonathan anticipates that unless economic conditions improve, housing prices may continue to decline.
In conclusion, Jonathan encourages potential buyers to be strategic in this changing landscape.
He suggests that buyers can now negotiate aggressively and find value in the current market.
For investors, he recommends seeking out properties that are undervalued with growth potential. Today's focus is on the surge in silver ETF volumes, which have recently outpaced the S&P 500.
This indicates a potential shift in investment strategies. making it essential for traders to stay alert to these changes.
The data suggests significant increases in silver ETF volumes may reflect changing strategies among investors.
This shift could lead to notable consequences in market positioning. Market analysts argue that unusual trading volumes often precede important shifts.
These indicators can lead traders to modify their investment strategies. Monitoring changes in ETF volumes is key for understanding market conditions.
Investors need to be vigilant in tracking these movements to enhance their trading approaches.
Historically, silver's response has differed compared to stocks in various market climates.
Unexpected changes in ETF volume can indicate impending broader market shifts.
Predictions suggest potential volatility increases in equity markets due to shifts in investor perception.
Moreover, if these trends persist, silver may surpass equities in performance.
Investors are encouraged to closely observe silver ETFs for signals of shifting markets.
Adjusting to these volume changes is vital for maintaining an edge in the market.
Today, we're analyzing the insights from Emily Brown about the market performance outlook for metals and stock indices.
Emily highlights several market indicators suggesting growth potential despite some economic challenges.
According to Emily Brown, despite some economic headwinds, there are indications that markets might rise.
She believes tracking key indicators will be crucial for assessing this growth opportunity moving forward. Emily Brown notes that technical indicators are increasingly displaying bullish patterns, especially in the metals market.
Can you elaborate on what indicators we should focus on?
She emphasizes observing volume trends and price breakouts to identify optimal entry points.
What does Emily Brown say about the current economic conditions affecting market performance?
Emily mentions that while there are challenges, overall investor sentiment remains cautiously optimistic.
So the mixed signals are still creating opportunities for savvy investors.
Exactly. She believes those who navigate these conditions skillfully could realize potential market gains.
According to Emily Brown's predictions, what should we expect for the metals sector in 2025?
Emily anticipates a solid upside in the metals market, driven by global demand.
And what about the stock indices?
She suggests stock indices could follow a similar upward trajectory if there are economic improvements.
To summarize, Emily Brown emphasizes that strategic investing approaches are essential in the current market.
She recommends that investors pay attention to technical signals to maximize potential gains.
It's clear that flexibility and awareness of market movements will be key for investment success.
Today, we're exploring the insights of Luke Gromen regarding the evolving gold market and its implications for investors.
Luke highlights that the interplay between monetary policies and market conditions creates a unique environment for gold.
Luke Gromen suggests that gold has historically been a safe haven during economic turbulence, and this trend is likely to continue.
He points out that rising geopolitical tensions are expected to increase the demand for gold, making it a critical asset in uncertain times. Luke emphasizes how loose monetary policy leads to higher inflation expectations, prompting investors to seek shelter in gold.
This pattern indicates an increasing relevance of gold as inflation concerns rise. According to Luke, current geopolitical tensions are creating an environment where gold is seen as a more secure investment.
These uncertainties historically correlate with increased gold demand, reinforcing its position in investment portfolios.
What does Luke Gromen predict for gold prices in the near future?
Luke anticipates substantial growth in gold prices as investors flock to safe haven assets due to ongoing economic uncertainty.
Luke concludes that investing in gold remains a strategic decision, particularly during economic downturns.
He emphasizes the need for investors to stay informed about geopolitical developments as they play a crucial role in the valuation of gold.
Wow, we've heard such an array of perspectives today.
Indeed. From Luke Gromen's insights on gold prices to Emily Brown's take on market gains, there's a lot to unpack.
I loved how they collectively agree on the interconnectedness of economic factors. That's a major takeaway.
Right. But interestingly, they don't align on everything, like Gromen and DiMartino Booth's debate on the Fed's efficacy.
Exactly. It's fascinating how Gromen pushes for more aggressive interventions while Booth sees the current approach as sufficient. So much to think about.
And let's not forget the housing market insights from Jonathan Miller. Rising interest rates have really shifted the landscape for buyers.
So true. Emily's take on patience and nuance in market recovery contrasts sharply with Miller's urgency.
A compelling mix of insights. If you found this discussion valuable, please give us a thumbs up and subscribe for more expert analyses.
Your likes and shares help us bring even more content like this to the forefront.
We have more exciting topics lined up, so stay tuned for our next video where we'll dive into the latest in global trade dynamics.
Thanks for watching, and we can't wait to see you in the next one.